Good morning, everyone. This is Anne Marie. Today is Wednesday, May the 15th, and here's a look at SPY. This is the abbreviated SPY report. You can find the extended SPY report on thetradingbook.com. So, let's take a peek. We've got another pattern here. Could be at completion. Could be just hanging out. I read an interesting tweet yesterday. It said that as long as the Fed keeps moving along with QE, we really don't have any reason to pull back from a general perspective. Now, we as technicians know that technical trading is a little bit like blowing up a balloon or stretching a rubber band. There's just so long that it can keep going up, right? That we are going to exhaust the system. It could be a mild exhaustion, as in this small move here, or it could be a not so mild exhaustion, as this move here, or it could be a very strong exhaustion. Have no idea. Here's the thing about trading well. Don't step in front of the trade. Now, I don't really know how many times I got to say that, but I am going to remind you every day that the reason we can stay green is because we don't step in front of the trade. See, if we think that we really understand what's going on all the time and we're willing to lay things on the line all the time, I'm going to tell you, it's like rolling dice. You just can't do that, no matter how great technical indicators are. And frankly, I'm very accurate at what I do, but I still don't get in front of my trades, by and large. I'm not going to say I'm perfect, because I do slip off the wagon once in a while and say, you know what, I'm getting in front of this. But most times, even though I don't collect all there is to catch, I am much happier taking a little bit of green every time than only taking a lot of green once in a while. All right? It's just, for me, mentally, psychologically, that's what makes me operate better. Okay? So, that's the way that I form all of these SPY reports, and this is no different. Now, let's take a look at what happened so far this week. So, we've had Monday and Tuesday to take a look at two legs move up. We can see we've got significant expansion yesterday. See how far away we're getting from the weekly VWAP here. We don't normally get too far from it. Here's a big gap up, and it moves sideways to catch up with the VWAP. So we don't normally slip away like that, and so here's the top end, started pulling back in. Another big pop. Look at the volume. Yeah, a lot more buyers than sellers. A lot of people are talking about the relative volume and how it's lower. I'm just looking at the ratio of buyers to sellers, okay? It doesn't even matter about relative volume. It makes no difference whatsoever, because the price is moving up. And if you are a trader that is getting involved in the markets, trade what the price levels are telling you to, and forget about looking at all the different things that are going to make you go, oh, I don't know, maybe I shouldn't, and that's not going to help you trade better. It's just not. So follow the levels and stay in the trades as long as your candlesticks make higher highs and higher lows. For instance, if we had this event and we saw higher low, higher high, higher low, higher high, higher low, higher high, holding the level, as long as we don't break support, folks, you don't get out of a long. And then higher low, higher high, higher low, higher high, higher low, higher high. It holds the level until here, and then it recaptures the level. That's an outside candle, hence the color of it. Okay, so that is all we need to really pay attention to. Can we confirm closes underneath our levels of support? If yes, we get out of the trade. If no, we stay in the trade. So tomorrow, today, excuse me, we'll be looking at the breach of 165.35. That'll take us into 165.84. Now this is R4. We're going to have a much wider pivot expansion today, right? Today's pivot points, these are Woody's pivot points that I use, and they use the opening tick to build the pivot points. And so we can tell from this range expansion that we're going to have pivot action that's wider than this, much, much wider. And the pivot point is going to be shifted up. What we want to think about is, can we come into the pivot, hold it, and then move further to the upside? Or do we meander sideways because we've got a lot of extension here? That's the big thing. So the breakout above here, going to take us into here, 165.84-ish. And then what you want to do is just pay attention to the current levels that the pivots are showing you. And as long as you hold support, you stay long. If we break down below, I think 164.74, we should run right back into the 164.28-ish region. And then if we lose that, we're just going to stair step down into here. We're really far away from the monthly VWAP. I am a little bit concerned about that. So we should meander sideways, drift down a little bit, or have one last press upward before we pull back into this region. That rubber band is getting very expanded, and we want to take care that we're doing the right thing. So follow the levels closely, pay attention to your candlestick formations. If we lose this region of support, this would be a broken break. This would be a failed breakout. If we lose this level, you can see that that is a breakout level. If we come back and fail it, it is a failed breakout, and we're going to watch it try to drift down into the lower levels. Okay? Good luck trading today.